So you have just been nicely brought through by Adrian on how to structure your RAP. If need be, please go back, take notes, and watch the video again. Now I'm going to lead you to the next question students commonly ask. The next question being, yes, I do know how to structure, but there are thousands of companies out there. How do I select the right company? And at the Learning Luminarium, we believe a rightly selected company is half the battle won. And let's see why. There are 3 rules we set for selecting a good company. Let's go through them one by one. Now, the first rule is the company you select must have an availability of external information. What I mean when there's external information is when you Google the company, let's say you select Tesla. When you Google it, you notice literally hundreds of reports done by newspapers, magazines, universities, trade associations. Now, with that, you have a company with a lot of external information. Now, why is external information important? It's because OBU has clearly shown. If you rely only on the annual reports and you do not have external information, you are going to fail. Alright? Your annual reports need to be supported by external information. So, the company you select better have a lot of external information. And we usually bring students through a few questions to help them assess the abundance of external information. The first, as I spoke a little earlier, when you do a Google check, is your company widely covered by the press and widely covered by analysts? I will touch a little on this part on analysts. Now, banks, they have analysts to look at companies and whether these companies are doing well and whether these companies are worth investing or should you sell off the shares of these companies. Such reports are vital because they are an external validation of whatever the annual report is saying. So if your company is covered by analysts, that is usually a good company and you should use such resources extensively. Next, after you have done the companies, what about the industry itself? Are you able to find a lot of resources on the industry? So let's say Tesla. Yes, Tesla, there's a lot of information on the company itself. But what about the industry of electric cars? Does the industry of electric cars have a lot of information? Because while you are talking about Tesla, you cannot avoid the need to speak about the industry. So just check, does the industry also receive a lot of attention? And one shortcut we find is just quickly look out. Does the industry have a trade association? Now, if they have a trade association, go to the website and usually within the trade association, you find a ton of good resources on how the industry is doing, what are the competitive forces within the industry, what is the future outlook of the industry, and all these are fantastic for you to use within your report. So, to sum it up, select a well-known company, select a well-covered industry. Examples, Tesla, Nike, Singapore Airlines, all these are nice choices, but do not limit yourself to them. Of course, now you know the rules, you can go and pick a similar company, one that you like. So that is the first rule. The second rule is when you select your company, especially if you are going to do a financial analysis of the company, if you're going to look through all their financial statements, select a company that has a familiar accounting standard, which in our case, being ACCA students, is IFRS. Be watchful and do not select a company that only uses GAAP. Because one, it is unlikely you are familiar with GAAP. And even if you were, are you at the level of competency to translate GAAP into IFRS? To be able to spot the differences between the two standards? If you are not too comfortable or if you are not competent in this area, please stick to just an IFRS company. And there are many good companies that have IFRS statements, so you should not be spoiled just because you can't find a company. Examples of a poor selection: Tesla, if you're going to rely on it a lot for financial statements. If you are doing topic 18, marketing, that is not a big deal. But if you are doing other topics that require heavy usage of the financial statements, Tesla, Nike, 3M, all these are not good companies. Takeaway: select an IFRS company. Now, the third rule: select a company with one or, and we do this with reluctance, if you really have to, one or a few business lines. For sure, avoid conglomerates. By conglomerates, let me give you an example. Siemens is a conglomerate. It's an example of a conglomerate. Siemens has businesses in energy, IT, transportation. It has businesses in so many areas. And the problem with a conglomerate is that when you pull out their annual reports, you will find it very difficult to isolate the profits and the costs of each segment. And if you want to take Siemens and compare it against another company, you would also face difficulties because it is hard to find a conglomerate that has exactly the same number of businesses as Siemens. So what we suggest to students is select a simple company. Select a pure play, a company that does only one thing. Example, Singapore Airlines. Or if you live in the UK, Morrisons. Morrisons only does the supermarket business. So it's easy. You choose Morrisons, you just have to compare it with another supermarket and you have your competitor analysis. So, takeaway: select a simple company, what we call a pure play company, something that only does just one business. So, we have the three rules. The first rule: select a company with an abundance of information. The second rule: select a company that uses IFRS. And the third rule: try to select a simple company, a pure play company. And with that, you would be able to rightly select a company. And as we see here, the benefits when you do so is that your battle is half won.